LLCs, gotta love it. You may have more familiarity with this. Maybe you started an LLC yourself. Maybe you work for one. I don't know what your connection to one might be, but just from who I've spoken to, people taking the exam, they have more connections with LLCs than partnerships, unless they worked at an accounting firm, in which case, boom. But hey, accounting firms can be LLCs as well. Now, the LLC, the Limited Liability Company, that is a business entity type that combines the benefits of a corporation and a partnership. Just keep in mind as we're going through, you may say to yourself, wow, one entity sounds incredible. Why doesn't everyone just do that? Well, there's different reasons. I mean, there's actually legitimate reasons. There's restrictions, for example, S Corps. Those are generally meant to be used for small businesses. There's a lot of limits on that. Yeah, an S Corp is a great business type, but a lot of entities cannot choose it because of the criteria and requirements to become an S Corp. LLCs, yeah, it's another great choice. And like mentioned at the very beginning of this lesson, we're going to have SIMs, multiple choice questions, where you're going to be given a scenario and you have to recommend to, say, a person or multiple people what the best entity type would be for them. So yeah, you really need to understand the intricacies which are beneficial for which types of people. So, yeah, I'm going to sing the praises of various entity types, but that doesn't mean it's the best one. It totally depends. LLCs were first introduced in the United States in 1977, but they have since become a popular choice for small and medium-sized businesses. Just for context, right? It's kind of more of a modern thing that we see here. The primary reason for the creation of LLCs was to provide business owners with limited liability protection while maintaining the tax benefits of a partnership. Hey, that sounds pretty good. And yeah, this overall was a great benefit here. Now, LLCs cannot be listed on the public market. So if you're looking to sell stock to the general public, you're not going to be able to be an LLC. You need to be a C Corp, which is going to go on to get double taxed. So you see, there are pros and cons to everything. Now, prior to the creation of LLCs by the government, business owners had to choose between forming a corporation, which offered limited liability protection, but was subject to double taxation, or forming a partnership, which was not subject to double taxation, but we did not have that limited liability protection. By default, the IRS classifies single-member LLCs as disregarded entities. That's an important point to note, and I would memorize that. What do we mean by that? We mean that it essentially doesn't exist in their eyes. Just like if you are two individuals filing jointly tax return, the IRS doesn't really view you as two people. The IRS views you as one single entity. Now, yes, they do. I know they don't view you as a person. You're not a person. They view you as one entity. So for tax purposes, that's what we mean by disregarded entity. So if a single member means, well, it's a member, those are the owners of an LLC. And if there's only one member, so it's just me, I'm the only owner of this LLC, it's as if it does not exist for tax purposes. Now, it exists for legal protection. And how is it taxed? Well, all of those items flow through to my Schedule C, and I just report that all on my individual tax return. So that's what we mean by that. I'll give it plenty of examples, especially as we dive further. Now, they're going to be taxed like sole proprietorships, again, going on your Schedule C, whereas multi-member, so two or more people who own an LLC, they're typically taxed as partnerships, meaning that the profits and losses of the business are passed through to the individual members and are only taxed at the individual level. This avoids the issue of double taxation that can occur with corporations. However, LLCs also have the option to be taxed as a corporation if desired, regardless of being a single or multi-member. That is something interesting. We'll talk about that more. Like, why the heck would you choose to form an LLC and then get taxed as a corporation, which is going to give you double taxation? We'll talk about that. It's not too important, but just know that if you see a question, it mentions an LLC. By default, assume it's partnership. Now, most of the questions you'll see will say, we have an LLC being taxed as a partnership. Cool. You know what they chose. But if it doesn't say anything about that, by default, assume partnership on the exam. And a question could say, here's an LLC, it's being taxed as a corporation. You could see that less common, but just something to watch out for. All right, compared to other business entity types, LLCs offer several advantages. Yeah, like I mentioned, once the LLC entity type was introduced, a lot of people started creating LLCs, converting over to LLCs. For example, LLCs, they give you limited liability protection, flexibility in management structure, and the ability to be taxed as a partnership or corporation. In contrast, sole proprietorships, you got no liability protection, and corporations can be subject to double taxation. But you do have to file paperwork, you do have to file a tax return, so just a little bit more work than a sole proprietorship. Partnerships also offer pass-through taxation, but they do not offer that limited liability protection. Overall, the LLC business entity type offers business owners a flexible and tax-efficient way to protect their personal assets while operating a business. And just one note as well, you may see this line here that partnerships do not offer limited liability protection. And you might be saying, hey, Nick, you're crazy. You just said that this LP exists and you have limited protection. And to which I did. However, as you remember, kind of tying all these important points together and how does it all work, in order to have an LP, you need to have a GP as well, and that GP is on the hook. So if you can find someone to be your general partner and be liable for everything for you, great, good for you. But let's just say it's just one person, two people, and they want to completely avoid liability, then they're not going to really be able to pursue that partnership angle. So that's, if that was on your mind, now hopefully that has been resolved. All right, the LLC business structure. Some of these things I'd be a little more familiar with as compared to, let's say, an LLP. The articles of organization, that's what you need to file with the state in order to create this LLC. The LLC, it's a popular choice, as we mentioned, flexibility, simplicity, liability protection. So those articles of organization with the Secretary of State for a particular state. Again, you're going to have an LLC in the state of Florida and the state of Texas and the state of Kansas. This document typically includes information, yada, yada, and not too important there. Now, what are these individuals who own the LLC called? These are members. Partners own partnerships. Shareholders own corporations, members own LLCs. So an LLC can have one or more owners known as members. Members can manage the LLC directly, or they can appoint a manager to run the day-to-day operations. Really going to kind of depend. Are we just talking a simple bakery business, or are we dealing with a decently sized, multi-million-dollar accounting firm or manufacturing business? Members are generally not personally liable for the debts and obligations of the LLC unless they have personally guaranteed the LLC's debts. Now, that's just overall. Let's talk about debt for a second because it comes up quite a bit throughout the exam. You can guarantee any sort of debt. We even have a whole lesson on secured debt, secured obligations, and we'll talk about that a lot more there. But generally speaking, why would you secure some debt? Why would you guarantee some debt? There are many reasons. So maybe someone's paying it for you. To do that, there could be many reasons. That's what I'll just say with that. So even though you don't have to guarantee debt, and you're not personally liable by default for debts, there could be an advantage to guaranteeing some debt. Maybe you get a cheaper interest rate or something. So if you choose to personally guarantee any debt, whether it's in an LLC situation, partnership, whatever it is, then yeah, you're on the hook. That's recourse debt. They can come after your personal assets. Just something to note there. Now, in most cases, the voting power of each member in an LLC is proportional to their capital contribution to the LLC. This means that members with a larger investment have more voting power. Profits and losses, these are going to be allocated among the members based on their contributions to the business. This is going to allow for greater flexibility and fairness in distributing the financial benefits and the risks of the business. How do we transfer ownership? Can we do it? Well, members cannot transfer their ownership in the LLC without the unanimous consent of the other members, unless the LLC's operating agreement does state otherwise. In terms of inspecting the books, all members of an LLC have the right to inspect the company's books and records. I mean, heck, that's even something else that would be different, right? If you want to form an entity and you don't want your other members or shareholders or investors, whatever you want to call them, depending on the entity type, to be able to look at the books, and why is that? It might not be for any malicious reason. You just don't want them to look at the books. I mean, maybe you get an auditor, so it's fine. You're being audited anyway. Then you may not want to have an LLC. Talk about corporations. And while yes, you can technically inspect the books, there's a lot of rules about, can I just go inspect the books for Pfizer or Microsoft? Me, as a one or two shares I own, nope, I can't really do that. But again, we'll talk about that a little bit more later. Lastly, termination. An LLC can be terminated in several ways, including expiration of a stated period of time, the unanimous consent of all members, the death or retirement of a member, or the bankruptcy or incompetence of a member. Just as a reminder of this word, incompetence, that could be maybe they're in a coma, maybe they were deemed legally incompetent because they started making crazy decisions. Maybe they're locked up, maybe they're in prison. There could be many, many different reasons why someone is considered legally incompetent. But my favorite example is just they're in a coma, right? Like they're not dead, but they're incompetent. They're not able to make decisions. All right, talking more about this beautiful LLC. In LLC, we are going to have members that own it. Remember that. Limited liability, pass-through taxation. We talked about that limited liability. Pass-through taxation, pretty much same as partnerships. We're going to have pass-through taxation. Operating agreement, just like we have a partnership agreement, we're going to have an operating agreement. It's going to outline the rules and procedures. Sounds good. These are not going to be required to file with the state, and they may not even need to be in writing, depending on the jurisdiction. So just like we have those partnership agreements, which kind of just say how we're going to allocate profits and losses. Now, think about it. The government doesn't really care how you allocate profits and losses as long as you everyone's reporting it properly and paying taxes on every dollar that's made. However, you're going to have that probably in your own files, in your own items to keep in storage. So you can refer to them as partners, as members, but you don't need to file that with the state. And lastly, articles of organization. This is just what you need to file in order to have this entity. Now, you may have a registered agent. Maybe it's the head of the company, the president of the company, or it could just be someone you hire to be a registered agent for you. That is a thing. You can hire a lawyer to be a registered agent for your LLC. All right, let's see a beautiful example here on LLC taxation. Now, LLCs are one of those that we don't have a separate lesson on, mainly because they're just not really as important. And if we think about it for a second, what questions may you see? Well, you see a question that says an LLC was taxed as a partnership. Okay, right away, that's a partnership question, right? So we don't really have to worry about LLCs as much as we do with partnerships. That's why we're going to have specific lessons on certain entity types and others we may not. So for this example, we're going to consider an LLC. We got 2 equal members, so they own it 50-50. And we assume that the LLC has a net profit of $100,000 for the year. We'll compare the tax implications for the LLC members when the LLC chooses to be taxed as a partnership versus being taxed as a corporation. All right, interesting. Very good. We like comparisons here on the exam. We like to see what happens if we change one thing. Just as a general note, if you haven't heard that from me already, love to beat that to death. It's always great to see examples of questions. You change one thing, how does the answer change? You change another factor, how does the answer change? Now, I will mention this throughout, it's not critically important, but again, why would you choose to get taxed as a C corporation? Maybe you're slowly trying to go from an LLC to a C corp to then get listed on a public stock exchange. As such, you're going to start to get taxed as a C corporation and slowly transform into a C corp. Like obviously there will be a date when you're officially a C corp, but it's going to be a whole process to be in compliance with becoming a C corp, right? So you may start being taxed as a C corp, getting used to it per se, but also just for your records, right? Making sure that you're able to do that. You're not going to just one day snap your fingers as a multi-million-dollar company and say, oh yeah, no, we're a C corp now. You got to prepare for it a little bit. So that's just one example, but again, not like you'll be asked, why would you choose to be taxed as a partnership versus C corp? It's just something that's interesting in my mind. All right, so for the partnership, it's going to be pretty simple. In this case, the LLC's profits and losses are passed through to the members who report their share of the income on their personal tax returns. Now, each member's share of the profit, $100,000 divided by 2, that is $50,000 per member. That is going to flow through on their K1. It's going to go to their 1040. Assuming a personal income tax rate of 25% for each member, super simplified tax rate here, super simplified way to do it, $50,000 for each member times 25%. That's going to give us $12,500 in taxes for each member. Now, the total taxes paid by both members, yep, that's $25,000. Just a reminder, if question's asking you what is being paid in tax, make sure, is it asking for what's being paid in tax by the entity, what's being paid in tax by the shareholder, or member, or partner? Just make sure you understand or you're not getting tripped up. Oh, the entity earned $100,000 versus each partner earned $100,000, which means that the entity would have earned $200,000. So something to keep in mind, don't get tripped up on the exam. Now let's see taxed as a C corporation. In this case, the LLC is taxed as a separate entity and the members do not report the LLC's profits on their personal tax returns. Eventually, you're going to report dividends, and that's how corporations work. But first off, we're going to assume a corporate tax rate of 21%. Corporation pays taxes on the $100,000 of profit. So the corporation made $100,000, makes 21% tax rate, pays $21,000 in taxes. Then the corporation is going to distribute the remaining $79,000 as dividends to the members. That's how we get $79,000. We pay those taxes. That is going to give $39,500 per member as a dividend. We're not done yet because now let's just assume a 15% tax rate for each member, but this is a dividend tax rate, which is different than an income tax rate. So that's why this is lower here. You see, you've got a personal income tax rate of 25. We've got a dividend tax rate of 15. Those dividend tax rates are preferable to income tax rates, well, depending on the income level. So we're going to say $39,500 times 15%. That gives us $5,925 in taxes per member. So first, we're paying taxes at the corporate level. Then we're paying tax at the individual person's level. And that's not good because we're paying a lot of extra taxes. Now, total taxes paid by both members on the dividends would be around $11,000. And when we're comparing the tax implications, the total taxes paid by the members when the LLC is taxed as a partnership are $25,000. On the other hand, when the LLC is taxed as a corporation, the corporation pays $21,000 in taxes, and the members pay an additional $11,850 in dividend taxes, totaling $32,850 in taxes. In this example, shocking, the LLC would pay less in taxes if it was taxed as a partnership rather than a C corporation. And that's going to be pretty much how it is, right? I mean, there may be certain situations where if it's a corporation, you pay less in taxes. That is something actually we will see many examples of. You'll see some multiple choice questions on it. But you just got to run through and see you got someone, if they've got a higher income tax rate or if they've got a higher dividend tax rate, those could have implications on what you choose to do. But 9 times out of 10, yeah, it's going to be partnership. Saves you some money doing that there. Another great example, kind of comparing two entity types. While, yes, this is the same entity type because it's an LLC, we're seeing, okay, what if this was a straight up partnership question? This is a straight up C Corp question. We see the differences in how that tax works. We're seeing a couple things here. A lot of this we have seen before, so I'm just going to kind of highlight the key points we have not seen before. So most states allow one person to form an LLC. That is going to have a disregarded entity status. So again, disregarded entity, that is an actual term, a DRE, disregarded entity. And that's an entity that the IRS doesn't really view as an entity. They're taxing you as the individual. Management rights, by default, all members have the right to participate in management decisions. However, the operating agreement or articles of organization can specify something different, but this is by default. So by default, you could have something, but if we change it up ourselves, that is up to us. Now, agency authority, if members actually manage the LLC instead of having some head honcho run the whole show, each member can act as an agent with the power to bind the LLC in business matters. Again, understanding this agency authority, super important. See a lot of questions on it. If I buy a couple shares of Apple, guess what? I'm not an agent of Apple. However, when it comes to LLCs, we see that it may be different if I'm a member there. All right, voting strength, proportional to capital contributions, unless specified otherwise. A lot of these things, unless it's specified otherwise. Profit and loss allocation. This is going to generally be based upon your capital contributions. If I contribute $10 million, someone contributes $5 million, I'll have double the power that they do, unless stated otherwise. Transferability of ownership. Generally, you cannot transfer your entire interest without the consent of all of the members, right? We kind of talked about that a little bit earlier. Access to books and records, we saw that as well. And then dissolution, pretty much, I'd say the same as partnerships. Very similar that we see in those situations. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.